Okay, it's gone now. Now, let's now start the class, and you see no one left any marker for us. Okay, thank you. Now I won't use this very much today. I can take it off. Get rid of this now. Do we have the remote control? No, leave it there. Leave it under this. I will have a blank new.
It will go in standby.
It will go down there. Right, much better now. So today's topic is ratio analysis. Ratio analysis. Now this is a topic, and sometimes in the books you will come across this topic as financial analysis rather than ratio analysis, okay? Depending on the type of book. Has anyone accessed any books so far? Read any books so far? Enjoyed reading the books online, yeah? Anyone? No one, really?
I do.
You did. Samuel has been reading since last week. Good. Did you get your login details?
Yes.
Okay, good. Did you have your cards now?
No.
Student cards? Yeah?
Yes.
Okay, please access Moodle for the slides. Then go to share the drive that you can share, student share drive for material that I will upload. And then go to catalog, library catalog, and search for accounting for non-accounting students. That's the book you will need, and I think I told you about this already.
Yeah.
Anyone searched for that book?
Yes, I did.
You did found it?
Yes.
You reading it? No, you haven't started. Please read that book. It's very important. Very important for your own training. Okay, ratio analysis. Now, I will give you two sets of accounts, and I ask you which one to choose from. Imagine you are an investor. You have Sainsbury's. Oh, sorry, you have first Tesco. No, you have Sainsbury's. Now, you also are given, okay, this is not writing properly. You are also given further information that the sales of Tesco is 1 million and their net profit is 500,000. And sales of Sainsbury's is 800,000, but the net profit is 470. This is net profit. Now you are an investor. You have to choose one company out of these two and invest your, let's say, £10,000 in the shares of these companies. If you are only given this information, nothing else, which company would you invest? And you have to choose one of them, given this information. Think about 30 seconds, then I'll ask you, okay? 30 seconds.
What's the question?
Question is, you are an investor
Yeah.
and you have £10,000 to invest. And you have two companies only to invest. And you have to choose one out of these two. And if you are given this information about these two companies, which company would you choose? Just think about it for 30 seconds, as I said. And then, okay. This lady said Tesco. She's going to choose Tesco and invest her 10,000. Anyone else wants to invest into Tesco? I'll first take the Tesco investors. You will Tesco. You will do Tesco investment. You will do Tesco. Tesco. So I have about 6-7 students Tesco. 6 students Tesco, sorry. Samuel, which company? Tesco. Anyone else? You Tesco. So 8 students. Okay, 8 students Tesco. Who wants to invest in Sainsbury's? We got about 8 as well. So the group is split out half, isn't it? Now, those students who said Tesco, why do you think you want to invest into Tesco? Why do you choose Tesco?
The gross profit margin is high.
Gross profit margin is high. Okay. Anyone else?
You share it.
I'm asking.
Sorry.
Tesco. Did you say Tesco?
Yeah.
Okay, go on, go.
So if you share, your share will be high as well. So as net profit is high, so your share.
Net profit is high, so your share is high. Okay, anyone? Tesco, whoever said Tesco, justify it for us, please.
Tesco sales high.
So Tesco sales is high. Simple, isn't it? You choose Tesco, okay. Any further explanation? Okay. What about Sainsbury, guys? Who wants to invest in Sainsbury's? What can you say about your choice?
So in comparison to the sales, the profit margin is high.
Profit
Smaller
margin is high. Okay. Any other explanations? Okay, I'll take
The very
that.
first one, to see the sales
Yeah.
is not much of a difference, but the profit, there is like very small difference.
Okay. Well, you have to choose one. Which company you said? Tesco?
Sainsbury.
Sainsbury. Okay.
And
So
then, obviously, there is a small difference between net profit, thus the tax will be less.
tax. Okay. Anyone else? Tesco? Oh, sorry, Sainsbury's. Anyone who chose Sainsbury's wants to justify their choice of company?
I mean, Sainsbury invests 200,000 less than Tesco
Yeah.
and got up almost as much as Tesco.
Yeah.
That's
Okay, you're taking relative stance. Okay. All right then. This is something you might have seen already, or haven't seen at all before. Now, this is intuitive sort of thing you always need to have. Like you are a rational thinker basically. Which you go for the biggest one always when it comes to money, isn't it? You choose the biggest amount of money when it comes to returns. Okay. The purpose of giving this example to you is this, to demonstrate that by looking at the financial statements or by looking at the absolute values, it's difficult to make a choice. But by using ratios, it's easy to choose a company. Okay, there's a ratio called net profit margin. So the first ratio, write it, net profit margin. Margin. That's the name of the ratio that you will calculate now for each company and see if your decision is actually the right decision or wrong decision, okay? Now, net profit margin ratio is equal to net profit divided by sales times 100%. Percent, okay? Is it percent?
Profit divided sales.
Now, there are two versions of this formula, net profit margin. The numerator should be net profit before interest and tax. But in our module, we ignore interest and tax and just take net profit, okay? The original formula in the book is net profit before interest and tax divided by turnover, which is sales. So sales, turnover, revenue, the same thing. So here we have net profit only, no net profit before interest and tax. Just take net profit, okay? It's the module instruction for how to call this. We use the simplest form rather than complicate the terms with tax and interest, okay? This is the simplest form. Now using this formula, can you calculate Tesco's and Sainsbury's net profit margin ratios? Two ratios you calculate, okay? You can do that, can't you? Easy. Just pick up the numbers, plug them in here, and then get the results. Okay, we'll do it together then. Tesco. So net profit margin NPM for Tesco is equal to net profit, which is 500,000, divided by sales, 1 million,
50%.
times 100%. Right?
Yes.
Net profit margin for Sainsbury's
50, thank you.
is equal to 470 divided by 800,000 is equal to what?
58.72.
About 59%. Yes? Now, the ratios now give you a clear picture. Although absolute profit is higher in Tesco, Sainsbury's profitability is higher. Yeah? Net profit margin. 59% compared to 50%. This means from every pound of sales, Sainsbury's makes 59p profit, right? While from every pound sales, Tesco makes only 50p profit. So those people, students who invested in Sainsbury's will probably get higher profitability. In other words, I would say it's an efficiency. They are more efficient, although they make less sales in absolute terms, they make high profits. Comparable profits. So you have to take a relative stance, okay? Relative to their sales, the profitability is higher in Sainsbury's, okay? So from every pound of sales, they're making 59p. Would you now change your decision? Yeah, and buy Sainsbury's shares, guys? Who chose Tesco? Yes, you will, certainly. Now, since I've given you handouts, using the formula, can you calculate the net profit margin for both years for the company that I gave you now? Take 5 minutes. It shouldn't take you more than 5 minutes. Actually, it might take you only 3 minutes, but for the first time, you will just do, it takes a little bit longer. Okay, do that for me, please. And then I will ask you then, answer. And I want everyone to do this, please. And then, once you calculate this, I will tell you the definition of this. Okay?
Ratio, both years.
Both years, 2010 and 9, please. Now, have you finished calculating this?
Yes.
Okay, who hasn't done so? Who haven't done? Oh, sorry, who hasn't done so? Who hasn't finished calculating? Or who hasn't actually understood it well, so that I can explain you? Everyone is okay with that? Everyone's fine? Yes? No, guys?
Yes.
Okay, good. Now the definition. Okay? One moment. Okay. You are an expert in ratios now. The same topic in one day, twice.
As accounting 33.333.
Yes. So use double digits, okay? One decimal, after decimal use 2 digits. Okay, now definition. Put a frame and decide where you write the definition. This ratio measures this ratio allows to measure, or just measures if you wish to write, allows to measure. This ratio allows to measure, you know, measure, M-E-A-S-U-R-E, measure. It's not a financial word, measure is not a financial word. Assess is a financial, I would say. But write this, it's much easier. This measure allows you to measure the overall profitability of the firm. Overall profitability of a company or a limited company, basically, of a company. Now, higher this ratio, the higher the ratio, the better for the company, okay? The higher the profitability, basically, the better for the company. Sorry?
I mean, for people to invest in the company.
It's not really an investment ratio. It's like a level of profitability ratio. So you can invest as well in the company with the high profitability, of course. Yeah, it's not an investment ratio, yes. But it indicates the level of profitability. Okay? Now, the unit of measure is percentage. Units of measure is percentage. So you report it in percentages. Yeah, you report it in percentage. Like 10%, 20%, 50%, 30%. So in our case, can you tell me what was the ratio for 2010? 1 person, please. 25.6% for 2010. That means 25 or 20, on average, 26% of the sales is a profit. Okay? And 2009? So on average, 33% of the sales is a net profit. High margin is better for a company. So in 2009, the profitability was higher compared to 2010. What could have caused this decline in profitability? Any intuition? What could have caused a decline in the ratio? From 2009 to 2010, the profitability declined from 33 to 26, right? Percentage. So what do you think could have caused it?
Can be cost of sales?
Could be raw materials, yeah? Cost of sales is the cost of raw materials, yeah? Usually. Could be
less sales?
Could be less sales. The case could be the less sales. Higher overhead expenses, yeah, it could be higher overhead expenses. If you remember, overhead expenses are fixed costs. Rent, heating, insurance, telephone bills. Any expense that doesn't change with the level of output is an overhead expense. So even if you do not produce, you still pay the rent for the space you rented, yeah? So that's overhead expense. Even if you don't speak on the phone, you pay the BTEs, landline fee, because you have it, right? And insurance. You always pay insurance even if you don't produce or you produce for the building you insured, right? As a project manager. And supervisors' salaries or salaries of the directors or managers, you will still pay monthly salary even if the production is zero, isn't it? So it's not related to production. So it's a fixed expense, okay? Overhead expenses. Another word for this is operating expenses, okay? The decline in profitability could be because of higher operating expenses in 2010. Clear, guys? So this is sort of an explanation you give in the test. If you have taken notes, please do so. It's helpful for yourself. Now, what is the difference between 26 and 33%? What is the difference between, so in 2010, we said we had 26%, and 2009, we had 33%.
8.8.
8.3.
So it's about 8, isn't it? 7.
7, yeah.
Can we say 7% decline? The profitability declined by 7%?
Yes.
You can't say that. When percentages are involved, you simply say the profitability declined from 33% to 26% in 2010. That's the right way of saying this. You will never say the profitability declined 7%, because you don't know that. It might be a higher decline. Okay? Between this. Don't subtract percentage from percentage and say declined by this amount. It's not absolute value. You can do this with the absolute values. Okay, how much was the profit for 2009?
400.
1200?
400.
400.
The what? The profit as well, sales, sir.
400, yeah?
Yeah.
How much was this one?
320.
What is the decline from this one to this? In percentages, how much percentage? In percentage, how much decline?
8%?
Use your calculators, guys. Use it.
20%.
You're looking at it as if... By how much did the profit?
80%.
80?
No, sorry, no. 8%.
8%. Decline is 8%.
No.
Do you know how to calculate percentage changes?
Yeah.
I think it's 20.
How much?
40% to 32%.
1.2%. You're sitting next to the camera, so it takes your voice than mine, so it distracts your... So I want this video to be useful for you later, so don't speak, please. If you want to speak, go away from the camera, so that it doesn't record. Actually, you shouldn't speak in the class, please, guys. Okay. Has anyone got the percentages? That's the way you calculate the percentage change from one year to the next year. So that's 80, right?
20%.
You see, the change is actually 20%. But if you subtract this, you get 8%. So that's wrong to say. Don't use this. Percentage changes, don't use, okay? You can only say the profitability declined from 33% to 26% rather than declined by 8%.
Because
You owe 7, okay? That's not acceptable. If you do this in the test, you lose the mark for that one. Because that doesn't explain me anything. If you say from 33 to 26% decline, then I'll accept it. Because actual decline is actually 20%.
yeah.
Okay? Not 8. Okay. Any questions? Any questions, guys? No questions? Everyone is happy with this so far?
What is the formula for calculating the percentages?
If you want to find the change from A to B or B to A, let's say in 2010 you have A, in 2009 you have B amount, yeah? These are amounts like 10 or 20. Now you want to find how much change there was between B and A, or from 2009 to 2010. In that case, you use this formula. The previous year, the first year, minus the later year, divided by the previous year, times it by 100%. Now this gives you the change from one period to the next period, okay? In percentages. That's what we use.
So the reason, another question, the reason for the NPM decreasing or increasing can be affected by cost of sales, by sales,
overhead expenses, or we call them operating expenses,
operating expenses.
Yes.
What else?
Economic situation, could be a recession, this year. In 2010 there could be a recession, that's why the decline, That's why people do not buy from you, so less sales. There are many reasons, but you have to justify each reason if you list that reason, okay? But the main thing to pay attention is the expenses, okay? Expenses are higher in 2010, that which declined. Because look at the balance sheet or income statement, sorry. You will see what is higher there. Okay, I will clean this off-topic discussion, and I will go back to gross profit margin. Next question, next ratio is gross profit margin. So gross profit margin. Now, the first one was net. This time it's gross. You know the difference between net and gross, the words net and gross.
Gross before tax?
Okay.
Probably that not deducted from the cost.
Have you ever looked at the cardboard? Let's assume that you bought a TV from Argos.
Yeah, and
When you look at the
says
TV
the
on one
weight.
side, it says gross net weight and net weight. Gross weight and net weight. Have you looked at this and seen this?
Gross weight is the weight of the TV, and net weight is the weight of the
Package.
overall package.
It's the other way around.
Okay.
So gross weight is the weight of everything that you bought. But net weight is the weight of the product of TV. Okay? Look at your laptop. You probably bought a laptop in the recent years. If you kept the box, look at the box. It says gross weight 4 kilos. Net weight is 2.7. Net weight is the weight of the laptop. Gross weight is the weight includes the laptop, accessories, and everything. Okay? The same with the profitability as well. So the first thing we calculated was the net profit margin, which shows the overall profitability or takes away all the expenses and gives us the final value. Now we look at the gross profit margin, which shows us the profitability excluding the overhead expenses or operating expenses. Okay, this is another measure of profitability. Now let's have a look at it. How does it look? The formula is gross profit for the year divided by sales for the year times 100%.
Basically the same thing.
Just this chance, it's quite the same. Are you calculating? Once you calculate, I will give you the definition and then interpretation of what is given there. So it's better first calculate and then definition will come with the interpretation later so that you understand.
40% in 2010.
It's 50% in
50%
2009.
in 2000.
2009, 50%, and 2010, 40%.
gross profit. Gross profit.
Okay, is everyone comfortable with calculating? Do I have to show you so that you learn it, or just leave it as it is because you finished calculating?
No, it's fine.
I don't have to show you. I have to show? Do you want me to show it to you? No? Okay. Good. Now, I will discuss that later. Write down the definition first. This ratio allows to measure again, or assess, in other words, assess or measure the profitability of a firm when operating expenses are excluded, or excluding operating expenses. When operating expenses are excluded. The higher this ratio, the better, obviously, for a company. Better for the company. So if you see a high ratio, then that means profitability is high, obviously. And this, and like net profit margin ratio, or in other words, similar to net profit margin ratio, this ratio reports amount of profit, or amount of gross profit, you could say, in brackets, gross profit, amount of gross profit per pound of per pound of sales, per 1 pound of sales, basically. Just like net profit margin shows the profitability per pound of sales. Okay? So if you get 50%, that means 50p out of 1 pound sales is a gross profit. Okay? And reported in percentage terms. Okay? Units to measure is percentage. No times, no ratio, just percentage. Don't leave it as 0.5. Change it to percentage and say 50%. Okay?
Per pound of sales, right?
Yeah, per pound of sales, yeah. Relative to the sales, this ratio is measured. Now, the higher the profitability, the higher amount available to cover your operating expenses as well. Okay? If you get a high profitability ratio, like gross profitability ratio, there is higher amount of funds to cover the operating expenses at the same time. Okay? So the higher the better, basically. Okay. Once you calculated this, what can you tell me about net profit margin and gross profit margin of the firm? The firm that you have had so far. The handout will tell you.
Yeah, it always worse in 2010.
Okay. Similar to net profit margin, the gross profit margin for 2010 is down. Okay? To what percent? 40%?
To 40.
So from 50% to 40%. Okay? So this tells us that cost of goods or cost of sales is higher in 2010, doesn't it? It does tell us that the cost of sales was higher in 2010 compared to 2009.
Can we, when we analyze this, can we say that, for example, in 2009 they had more, like, just assume that they had more profit, and they spend more money for recruiting more people.
Now recruitment expenses are different. They are overhead expenses.
Okay, just to
We are looking
spend
at cost
some-
of sales at this stage. Cost of sales. This cost of materials is a cost of sales. Now in 2000, what you can write about it is this. Compare gross profit with net profit each year. And as you can see, 2010 is down, a little bit lower, isn't it? All the figures, net profit margin and gross profit margin. Now what you can say about gross profit margin in 2010 is that the cost of sales relative to sales is higher this time, because you have 40% gross profit, which means 60% of the sales is covering cost of sales only. Clear now? In 2009, the cost of sales compared to sales was lower. That's why it's 50% you have. In 2010, you have 40% gross profit margin, which means your cost of sales is higher compared to sales and compared to the last year. Okay? That's the way you can actually comment on this sort of profitability ratios. Did you get anything from these guys? A little bit confused. Where did you get confused?
So like, the cost of sales, we compared of the same year, like 2010, right? The gross profit and the net profit. And from that we concluded that the cost of sale was higher in
2010.
10.
Because the gross profit is low.
Yeah. In the sense, yes. The net profit is, in the previous case, the net profit was also low.
Yes. The reason is, again, in 2010, the net profit is lower than 2009 is because the expenses are high in 2010.
That's the reason why the net profit was also
Yes. Because if you look at the sales, in both years, sales is stable, isn't it?
Yeah.
The sales even actually increased, didn't it? Can you see the sales increased? But the expenses also increased faster than the sales.
Yeah, we can
Okay.
say that,
Yeah.
that faster than.
Your sales increase slower than the expenses. So expenses are quicker to increase compared to sales. That's why you have relatively lower profitability. Okay? In other words, increase in sales from 2009 to 2010 was low compared to the costs. Costs have higher increases. That actually causes the decline in profitability. Okay?
It would have been better to keep the sales and the cost. I mean, if they didn't increase the sales and they would stay with the same expenses.
Sorry, say it again?
It would have been better if they didn't increase the sales.
No, it would be better not to increase the sales, you mean?
Yeah,
Even if you keep the sales on the same level for both years, the suppliers might give you a higher cost. Yeah? They might charge a higher price for the raw material.
okay, yeah.
Still you get a low profitability. I think the costs do not increase because you increase the sales. The costs increase because the suppliers mostly charge higher prices later. That's why the costs increase mostly in most cases. Okay. So the conclusion is sales increase slowly compared to the cost of sales and expenses. Okay, that's why the profitability is down in 2010.
So cost of sales, cost of sale increasing.
Yes. Cost of sales increased faster
Faster.
compared to sales. Is it clear, guys?
Yes.
Can I have a look at the example here? So this is the paper you have. No, sorry, I'm going to demonstrate this to you, what I mean here by increase quicker. So in 2010 and 2009 here, okay, you have sales. Sorry. Thank you. And cost of sales. See, the increase from 2009 to 2010 in sales is how much? 50 pounds, isn't it? Yeah? From 1,200 to 1,250, right? Cost of sales, how much is in increase? 150. The speed of sales increase is slow, while speed of increase in cost of sales is higher. That's why in 2010 you have low ratio. So the earlier statement as I made is compared to sales, cost of sales increased at a higher amount, yeah? By a higher amount. That's why you have lower ratio now. Some students could argue that why we have higher sales but still our gross profit is low in 2010. The reason is the speed with which sales increased is low, or the amount by which sales increased is low compared to the amount by which the cost of sales increased, yeah? So cost of sales, in other words, cost of raw materials become expensive. Could be the reason, isn't it? For the low profitability. So the company needs to improve its working capital management. Buy at a low price, sell at a high price.
Changing suppliers, I guess.
Change suppliers. Maybe there is an inflation. And inflation means high prices, yeah? Maybe the company is selling the same amount of goods. I mean, they're buying the same amount of goods from the supplier at a higher price. That's why this is increasing. But they are not changing the price. They're keeping the price in the same level, isn't it? Maybe a little slightly increase, that's why you have 50. But they're purchasing now the raw material at a higher price. That's why there is an increase. So we really went into breakdown into, I have broken down everything now. Hopefully you understood this.
Yeah.
Okay? Any question now? Next one. Next ratio. If you do not have a question, next question. Next ratio, sorry.
It's just not
Another profitability ratio, return on capital employed. Return on capital employed. ROCE is an acronym for this ratio. What is the time, guys?
5 o'clock.
Excuse me. 5 o'clock? Okay.
10 past 5.
10 past 5.
Okay.
We should have
Asking about-
a 10
Yeah,
minute
10 plus
break.
5.
Okay, we'll have a 10-minute break and we'll continue. I thought it won't take that long for us. It was taking long.
Not cooperating with earlier.
If you wish, you can leave early if you don't have 10-minute break. But if you really want the fresh air, just go and get fresh air. Yeah, go and get fresh air. Everyone wants fresh air. I think that's better. I got your email. I checked it yesterday only, sorry. I usually don't open the TSD account very often. I've been marking other stuff, so I'll look at it later. Yeah. What happened? Okay, something wrong with that. They don't know how to manage it.
What I think is someone seems to take
当然你花的就多呀。
You mean shareholder?
这有什么
A new
这种问
shareholder
题？
take over or just a change in management?
take over the whole company.
So it's a new share. Well, it becomes a private company or just still public?
Still public, but
If somebody comes to take over, that
Uh,
means they
share
they
price
pay you.
will-
Yeah, they pay
the
you
maximum
by
of
price.
52 weeks. The
刚
maximum
讲的第
price
三个，还有
shares
5个。
during the
It takes how much money?
考试你是每一个咱们
So
做完每
it's
一
good
个，
that
然后
you
就
clear
是
the
还是总共
open balance and then
So
less than 180.
all of them the conclusion all of them all of them。
那应该讲完这个之后，
So we give the net profit and one the share capital foundation. So we take this one, which is working capital.
Working capital.
So not the working capital.
Staff capital.
So it's the altogether the preferred share, the normal share. All is equal.
Yeah, this one doesn't say anything, but usually it's
Usually
ordinary share.
it's ordinary shares, not the preferred.
So today you should do all finish all of the
This is a different paper.
no I mean
In your exam paper, yes, it will.
I know
No calculation.
So when we do all of the calculation and then to explain what the
As I said, you don't do calculation.
okay.
You will be given the calculated table. You just need to write the report.
Write the report
Yeah, this is an
like
exercise.
when you said
This table, yeah,
okay.
just write the report, no formulas.
But we have to like explain all of the like the first one the okay just follow one by one and then all of them in the report.
Yes. So I will show you.
I think I understand.
Okay.
哦，我们考试不计算，我们考试只写一个报告 report。他没有，他说是在考试的时候他会给这样的表啊，就是几乎然后什么情况，他 sale 和 net 数是多少，我们唯一要写的是这个 report 的就是说像第一个说这个他的 profit，因为
我的意思就是你要写这个的前提还是你要算出来它的。
不用算，
不算你怎么写？你怎么写它摆
他们这
在
个数目都有的，就是说，他就说他，比如说这个，这个 test for celebrate，
对，这些有啊，但这些东西有吗？
他说不用算，我说
不用算
我
为什么
要
呀
算完每个，然后他告诉我不用算，他说到时候会给你一个表，你只需要写一个 report。
表就像这个表让你写report，那你不算的话，它是你看这大题，对对，你不算它，你怎么给它分析？你就跟这 report 说应该怎么看怎么看怎么看的。你不是你现在说一个，比如你想报告，你报告它，你解释一下它怎么了。
就说你看他的那个 net profit，net profit 从这一年到这一年是降了吧？但他的 sales 这一年这个比他是高的，是因为他的 cost of sales 那个比较 quickly。
I'll do that later. I'll do that. Not now.
No, I'm just taking my name in the list.
就是我也觉得应该算完了之后他
起来跟这
写的这个。
一本正经，因为他可能没就是理解你是什么意思。
那可是他的确有一句我听得挺清楚的。
听到你怎么去看的，是吧？
对啊。
把这晚上上班也是重要的。
Just go upstairs. Yeah. Sorry, say again.
一个人写对。
Yes.
是个东西不是给钱的，我
Not much important numbers.
没有那么大，没有那么大。哇，好忙！我不行了，我没有点说这个老师讲了，哎呦，我中文还好点，我是高考系的人。
That means we have to only discuss what the part is.
打电话问问看能不能买羊肉签。
No, no. What I do is when you
白想在这儿呢。
and you just say something.
Why not?
You have to make a report, financial report that says, okay, gross profit ratio is X amount because of this. Not like
So we have to like discuss with why it is high or low rather than
reasons. This is an advanced financial management. You don't get to do this one. You get an easy one. At the end, I'm sure you will have to do it.
So can we not change this class like in 6 o'clock? Can we not change the time of this
No,
class?
I don't think so. Because it will affect other rooms and teachers' stories. Don't open the door, please. That's fire exit. You aren't allowed to open it until...
Что-то украли, говорит?
Да?
Вот как писать? Чего-то украли, Я фейл ваш сам. Готовился ли сам? 25%. Я сейчас думаю, да, 25%. Все сдал, все сам сдал. Я вот 110 кредитов получил. Вашу запику получил 25, но я вот чуть-чуть знаю, можно, да, по идее? Раньше было. А как вообще, если, допустим, повторять этот экзамен? Так, то же самое.
不是我吃的，是你自己吃的。
Ну, если я надеюсь, что может. Но если что-то я подумал,
За email? Да. Не знаю, у него есть ли
есть.
Yeah, that's it. Guys, this is my email in case you need to contact me. I forgot. At tsd.ac.uk. Okay, I think it's about 10 minutes already. About.
大学吗？他写大学就要写大学。
有他在的时候也都一样。
我怎么这么烦呢？
That's my email in case.
I 那我跟你说出那好几个学校，STS 2是大一到
That's the
AC
one
到
on YouTube.
Huh? Yeah, that's my email.
And that's us,
你有时间就行，钱让你老公挣来。
Okay, this is return on capital employed acronym. You will use this one and you will see this acronym in your test, I think.
flow。
return 啊。
Now, the formula for this,
Where's the long name?
return on capital employed.
If you understand.
Now, can you please calculate the return on capital employed using this formula for the company for 2 years? Finished? Okay. What did you get? For 2010. How much?
Yeah, 4%.
Okay. So 27 and 40%. So 2010 is 27%, 2009 is 40%. Now, I will give you the definition and you will now interpret it yourself afterwards, okay? Write it down, the definition. This ratio measures the efficiency. This ratio measures the efficiency with which this ratio measures the efficiency with which the company uses shareholders' funds, with which the company uses shareholders' funds. The company uses shareholders' funds. Another interpretation for this, or definition for this, is this. You could actually say this in a different way as well. This ratio measures the profitability per £1 of shareholders' funds. Per pound of shareholders' funds. Now, units of measure is percentage again. The higher the better again. Okay? If it goes down, not good. In simple words, profitability is down.
Can you just finish up the sentence with the first definition?
Which part are you?
this ratio measures the efficiency
With which?
the company
Uses shareholders' funds.
Okay.
The capital is shareholders' funds in our case, okay?
Okay.
Yes, go on.
So it reflects the
efficiency.
profit per £1 of investment.
Exactly. So £1 of shareholders' investment.
Efficiency.
Now look, 2010. Yes, go on.
Yeah.
Go on.
Yeah, I mean, I just want to say what you're going to say, I think.
Okay.
If in 2010, like 26% will be higher per pound. So if you invest £1, you'll get £1 26 pence, yeah?
Okay, yes. Now what he's trying to say is, if you get 26% in 2010, that means 27p of £1 investment. Sorry, I'm going in wrong direction. 27% means the return on £1 of investment is 27p for this year. If you invested 1p in £1 in the company, you would get in return 27p as an investor. Okay? If you invested in 2009 £1, you would get 40p back in return, or you get 40% return for your £1 investment. Okay?
Every 100 pound it comes 26 pounds.
Exactly. From every £100 of investment, you get £26 in 2010. But if you are a lucky guy or a girl investor, then you could have invested in 2009 and got your £1 back plus 40p. So 140. Total return, yeah?
Yeah, one.
Total return 140. But the absolute or the net return
Net
is
return is 40.
all other expenses minus, and assuming that is all other expenses actually minus, you get 27 or 26.
26.50 something.
So it's 27p. Okay, on average you get 27p. So higher the ratio means the company is actually utilizing the shareholders' funds more efficiently. They're turning around the £1 quickly and efficiently. Clear now? This is something you write for your test in the same manner, okay? Next, liquidity ratios. There are two liquidity ratios. Liquidity, L-I-Q-U-I-D-I-T-Y, liquidity. Liquid means mere cash or cash.
Those ratios before, can we call them profit ratios?
Which ones? Profitability, yeah. First three ratios so far discussed are profitability ratios. Thanks for reminding me.
Is the formula?
That's the formula, yeah. No 100% this time. Just the ratio.
divided by 6 minutes.
Now, are you finished calculating?
Yeah.
I will not further give you definition and then explain you what this result
5 is to 1, 2010, and 5.5 is to 1, 2009.
Okay. Is everyone happy with the calculations? Yeah? You should get something around 5 and 4. Was it both of them 5?
All of them 5.
Okay, that's wrong.
5.5 and 5.
4 and 4.5. 4 and
Yeah.
5.
5.03.
Okay, guys, I'll help with the calculation. Guys, listen. In 2009, the current assets are
610
610 and 10.
divided by 110, can't have it.
Divided by current liabilities, 110, yeah?
Yeah. 5.5 is to 1.
This is the current assets. This is the current liabilities. Can you see that? Yeah? Now, do you have spare paper? I forgot to keep one for myself. Spare handout, spare handout left. So it's, I printed the right amount then, this time. I'll have to keep one of mine. You've calculated already?
Yeah.
Thank you. Now in 2010, current assets are 755. Yeah, 755. So it's the sum of stock, debtors and banking cash. Current assets are 755. Now current liabilities in 2010 is 150. So use these figures now to calculate.
5.03.
So for 2009 you will get
5.5 is to 1.
5.5. For 2010 you get 5.03.
Oh, 3.
That's the correct answer. Okay, you got that? Good. Now let's get back to this definition now, if everyone is happy with that.
So can you check Ben's once more?
Sorry?
2009 how much? 5.5.
2009 was 5.5 answer, and 2010 was 5.03. Now
The unit measure
EC pound.
it's ratio, just leave it as
Just
yeah.
ratio.
It's just related to pound. I'll explain what it means. Yeah. Now definition is, you write it down. Yeah. This ratio allows to measure. This ratio allows to measure or helps measure any words you can use here, obviously, as long as you understand it later when you read it, okay? So this ratio allows to measure the ability here, okay? We're looking at ability this time. Of the company. Of the company. To pay its short-term, the word short-term liabilities. So ability of the firm to pay its short-term liabilities using its short-term assets or current assets. So using its short-term assets or current assets. Now, the ideal ratio is 2. So if you get a ratio of 2, it's good. Right? If you get a ratio of less than 1, there's an issue with liquidity of the company. Yeah? But in our answer, the ratio is 5.5, which is very good, isn't it? You have high liquidity in the company. So the liquidity should be around 2. Higher is okay, lower is not okay. Lower is not acceptable level for a company to carry on. Now I'll tell more details once you write this.
Higher.
So
If
higher
it's
than
way, if it's way too high.
Yeah. There's a good question. What if there's a lot of the ratio is too high?
It's something
Like 5.
Something is definitely wrong.
Something is wrong with the working capital, isn't it?
They hold too much liquidity all the time. They can reinvest this thing.
The cash is not working.
Circulating.
So liquid assets are not being managed properly.
Yeah.
whether it's cash or stock or debtors. In our case, these three assets. So high ratio doesn't necessarily mean it's a good situation, financial position for a company. Liquidity could be too high due to a lot of stock, could be high due to a lot of cash, due to a lot of debtors. In both cases, in all cases, you have to find the optimum level.
So in this case, they hold too much stocks. That's why.
In our case, he noticed that we've got a lot of stock in our company. Is it right?
Yeah.
Look at it. Is the stock too high?
So when you go the quick ratio, then we can identify.
Okay, that's right. You calculate it quickly. We'll have to do it later.
So if it's too high, it means the assets haven't been used
Efficiently.
efficiently.
Okay, good. Now, in your answer, you have 5.5 for which year?
2009.
2009? Is everyone okay with that?
Yes.
5.5 everyone? Now, when you put the answer, you have to put 1 next to it. This is the right answer. So it's a measure, when you don't put percentage, you don't put percentage here. This means, for every £1 of liabilities, the company has 5.5 pounds of assets, yeah, to cover. Yeah? Clear? Ideal ratio is 2 to 1. We want to have for every pound of liability, 2 pounds of assets. This is too high. Simply because you hold a lot of stock or cash or debtors in your balance sheet. So you have to use it efficiently. Okay? When you come across this sort of amounts, just mention that having high liquidity doesn't necessarily mean efficiency. It means a lot of liquid assets you have. It means you can easily pay the liabilities, but it doesn't mean that you can make a lot of profit. Okay? This is liquidity ratio. Don't confuse this with profitability. If you remember, profitability was down by a lot of margin, but here slightly down, but high liquidity. So you could be a very liquid company, but less profitable. Okay, go on.
But what might be, again,
The
I
high
mis-
liquidity.
I misheard. No, if it's low,
If it's low,
what might be the reason?
liquidity means. You mean liquidity?
If it's less than 2. for
Oh,
example,
okay,
less than
okay.
2.
If the liquidity goes down and it's less than 2 or less than even 1,
Yeah.
the reason is you
Not
have
enough.
too much liability. Maybe you have short-term loan which you need to pay, but you don't have enough cash. Maybe you have overdraft. Maybe you have a lot of creditors which you haven't paid. That's why the liquidity current ratio is low. You could have something like this, 0.7 to 1. Sorry. And towards the end of the day, it's getting worse. It was okay in the morning. Now, 0.7 to 1 means for every pound of liabilities, you have 70p of assets.
Yeah.
So you need to find 30p to cover the remaining liabilities. Usually you have to get a loan for that one.
But so that's paradox. We have a low current ratio because we have loans, and we need to get loan to cover the loan.
Cover it again. Yes.
It's paradox.
It's getting worse if you get more
Yeah.
loan to cover your loans. I have a friend doing that. He's got a credit card balance. So I had him. Now he's paid off his credit card. He had a balance of 400 something, 450 or something like that in credit card, and he could borrow maximum 500, the maximum limit in his credit card. So when the minimum amount payment comes to him, every month you have to pay minimum amount, isn't it, for your credit card? So when it comes to him, about £25, he goes to cash machine, takes from credit card £25, pays into
Oh
credit card.
my God.
So takes from it and pays into it. That way he slightly increases the balance, but doesn't doesn't incur extra charges. It's better not paying. It's better than better than not paying.
Yeah.
Because if you don't pay, you will be charged extra. So he decided to take cash out and put back. But I think he eventually cleared it all after finding a job. I think that was a brief period he had. He was out of work, and that's what he did. The same with companies. To pay the loan, they borrow loan.
Yeah.
The liquidity goes down and down eventually.
Just
So
they
if you want to
buy
pay
time.
your, no, sorry.
They buy time, right?
Yeah, they buy time, but at the end, they're winning from time in terms of time. But they are actually losing a lot of money because they have to pay extra interest now if you borrow a lot extra. Okay?
So then,
Is the interpretation clear to you? How to interpret this? 5.5 and 5.03 is too high liquidity. It's good that the company is liquid, but is the sales picking up? No. You should have a relative sales as well. So the reason could be any. Could be a lot of cash in the business just sitting, earning nothing. Could be a lot of debtors which you need to collect from your customers, and could be a lot of stock. Now we'll find out when we calculate the quick ratio. Next liquidity ratio is quick ratio. Some of you guys are aware of these things. It's good. And it's actually a revision for you there. And it's a very interesting topic. You will remember it for about 20 years.
It's very interesting, but it's difficult to remember.
Do reading, please. Go to the websites. Type any ratio at Google. Gives you the example. If you prefer reading, go and get the book. Quick ratio is current ratio. No, current assets, sorry. Minus stock. Current liabilities. By the way, don't forget to mention 2 to 1. It's an ideal situation, okay?
Yeah.
Compare the ratio to 2 to 1 ratio and then compare if it's good value or not. I mean liquidity. If that liquidity is not acceptable. So this is the formula for quick ratio. It's similar to current ratio, but only we are taking away stock from current assets to calculate the liquidity. Now calculate this for me, please, and I will give you the definition and interpretation.
Is the same standard for the time ratio as well?
Yeah, the standard is 1 to 1. Ideal situation, 1 to 1 here.
1 to 1. Then it is okay.
Yeah. Okay, what value did you get for 2010? 1 point?
1.03 is
Okay, 1.03. Now for 2009?
1 is to 1.
1? Exactly 1.
No.
I got 4.2. 4.23.
Yeah.
No.
For the 2010.
4.23.
Which one did you ask for? 2009 or 2010?
I want both of them.
No, the second one you asked.
2010.
The second one was 2009.
It cannot be 1 to 1.
stock 是多少？
Current asset.
Just minus
550.
610 less 500.
It is 755.
755, yeah.
So it's 4.2.
4.2.
Okay, 2010. Look at 2010 now.
Yeah.
Current assets are 755.
Yes.
Stock is 600.
Yes.
So that leaves us 155, yeah?
Yes.
Divide by 150, current liability gives you 1.03.
1.021, yes, something like
Almost one.
Yeah. Now, almost one. Now 2009,
610
610 is the current asset, minus
500.
500,
divided by 110.
divide by 110,
Yes, it's 1
110 over 1.
1.
Okay.
And
2010 1.025.
2010 755 minus 120 divided by
1.
No,
600.
600.
Okay. Can anyone now intuitively tell me what is the definition of this formula? Intuitively. So we need to learn how to interpret the formulas now.
Yeah, the main object of this ratio is to identify how much actual liquid, actual cash the company got. In this case, if you deduct the stock thing, rest of the thing is only the bank, cash in bank and cash in hand. That is the most liquid thing for the company.
Okay. Let's write the definition there and I'll add what he said now. Onto what he said. Okay. Definition. This ratio measures the liquidity of a company in strict terms. Strict. You know the strictly? So strict terms. How does it do that? Strict terms. This ratio allows one or allows to assess the liquidity. This ratio allows to assess the liquidity no, not liquidity, assess the ability, this time it's ability, to assess the ability of the firm to pay its short-term liabilities. Short-term liabilities.
What are the two, sir?
To pay its short-term liabilities. Using its most liquid current assets. Most liquid current assets. Most liquid current assets, which excludes stock.
using its
Most liquid. Using its most liquid assets, which excludes stock. Stock is not liquid compared to cash and debtors usually. That's why you decided to take it away from the picture and say, will the company pay its liabilities using cash and debtors or not? So if you get a measure ratio of 1, that's an ideal situation, ideal value. If you get a ratio less than 1, the company faces difficulty to pay later. Yes.
So why debtors are included here? Because sometimes some debtors might be a bad debt. There's a chance to be a bad debt.
Yeah.
So why debtors are included in a like liquid thingy, like a cash thing?
It's a good question. Why do you not take away debtors and then leave just cash?
Yeah.
The debtors are considered as near cash because you can sell your invoice,
Oh yes.
factoring service.
Factoring.
But then you can't sell your stock at the price you want to sell.
No.
You can't force a customer to buy your stock, in other words. So it's difficult to sell your product if no one wants it, no one wants it. You have to reduce the price, but if you reduce the price, you will reduce your margin as well, profit margin. So two-way sort of situation here. So that's why you take away stock and then measure without stock the liquidity. And an ideal situation here is when you get 1-to-1. In most cases, you get less than 1. In most cases, usually you get less number. But in our case, it's 1, which is a good thing. But now, can you tell me something about it? What was causing the high liquidity in current ratio?
Because stock.
Because of stock. When you take away the stock, liquidity boom, goes down to 1. From 5 to 1, isn't it? So huge drop. So the company has a lot of stock. What can you conclude now about this company?
They're not selling lots.
Because they mightn't be selling a lot. Or maybe they are selling okay because sales increased. But
A lot of stock is
they just
ordering too
They
much.
need
ordering
stock
too much,
management.
yeah? Maybe it's Christmas time, right?
Yeah.
In Christmas, companies order a lot of stock because people buy presents. Maybe this company is a clothing manufacturer, which manufactures now or sells now a lot of winter clothing, and these statements are for December. So in winter time, they stock a lot of winter clothing. That's why it's high. So it depends on a lot of situations and cases. Now, you are given the name of the company and industry. Which company, what industry this company is in? Please read the first paragraph. Okay, no problem. Just need your name.
Is Christian Lewis sports?
Chris, I'll change it. Okay. I'll put yes. Thank you. Guys, next time, don't repeat that. You have to stay here. Now, can you read the company industry for me, please?
Sports equipment.
Sports equipment. And is it sellers or producers?
Manufacturers.
Manufacturers. So the company might have a huge order now, which is going to be produced soon. That's why they might have a lot of stock in the stockroom. And stock includes, don't forget, raw materials as well, purchase of raw materials. So maybe the company has a huge order and they stocked a lot of raw materials and they're waiting for the sale. Or maybe they produced a lot and put in the stockroom, but no one is buying now as they expected. Or sales are slow. Okay? So which causes us high liquidity problem? Okay, go.
But the last year in 2009, there's also a 500 stock. So all the time they try to.
They kept extra
keep
stock
this
all the
stock.
time.
Yeah. Why? Like
Why?
Yeah, I think it depends on the business strategy. But
Yeah. They might have the strategy which is
keep this
called
stock.
laid back strategy. It's a good term for it. Companies stock for emergency a lot of stock, but that actually causes them to pay more expenses for them.
They don't believe just in time.
Yeah, there is a just-in-time method where you just get the stock for order in time, right? You only produce when there is an order. But there are companies which only keep the raw material just in case there will be a huge order. Okay, there could be many reasons. Okay, you could advise the company to in your report, you could advise the company to adopt a just-in-time method so that there will not be a lot of stock wastage, or there will not be storage expenses. And because sports equipment takes space, they have to rent the space as well. So rental payments are higher.
So can we put this kind of suggestion, like you said, just say, so
Yes,
can
yes, yes.
we were allowed to say this thing. So we are allowed to say this thing.
Yes, you can if you think this is relevant in this situation. But I think it's relevant, you can mention it. But as a basic financial management student, you aren't required to do this. You need to give basic explanations, just key points. Don't expand too much on this, okay? Just give key points like why it's higher. Why current ratio is higher than quick ratio is by so much margin. The difference is 4 points, isn't it? 5.5 down to 1.03. So you have decline, big decline. But the reason is company bought a lot of stock. That might be because of expectations of future sales.
If it's low, 0.3 to 1, it means they have not enough stock.
No, it's not the stock. They do not have enough current assets to pay their current liabilities. Could be not enough cash, could be not enough stock, or maybe the debtors are low. So liquidity doesn't necessarily mean there is not enough stock.
But
They might have enough stock, but the liability could be too high.
So what liquidity actually means?
Liquidity means higher the liquidity, higher the chance of being able to pay the short-term liabilities. Like if you have a lot of cash, you are liquid because you can pay your debtors quickly. Creditors quickly. The bills and all this you can pay quickly. But if you have less cash, you are not liquid. In other words, your ability to pay quickly is low. Okay?
Liquidity can be mentioned as a problem as well.
Yes, you can have a liquidity issue, which means less than 1. Current assets less than 1 is liquidity problem. You have less assets to pay your short-term liabilities. Current assets to pay your current liabilities. Okay? Liquidity is short-term. Solvency is a long-term. Don't forget that. If you have a long-term loan, that's actually a solvency issue. Liquidity is when you calculate the short-term. So what time, guys?
6 o'clock.
So we will finish now. What I will do is
Can I give the link, sir? Your YouTube